Markets in turmoil. What investors need to know. The market's down, the headlines are screaming panic, but should you be worried? Today, we're cutting through the noise to give you a clear, level-headed approach to investing in these turbulent times. Welcome back to the What the Wealth Retirement Podcast. I'm Jonathan Bednar, certified financial planner. And if you've been watching these markets lately, it's been a little bit of a roller coaster. But before you let fear drive your investment decisions, let's take a deep breath and put some things into perspective. In today's episode, I'm going to cover why market turmoil isn't unusual, the biggest mistake investors can make in volatile times, and smart strategies to keep your financial plan on track. So let's go. The premise of this podcast came from a blog I stumbled upon, and the data was by Charlie Belillo. And it is really kind of a indicator based on the CNBC specials that get aired when things are going haywire in the market. They have these special kind of after the market closes roundtables where they're discussing the headline, markets in turmoil. And, they spend 3, 4, 5, 6 hours discussing everything that's going on. And what it does is it drives hysteria, it drives confusion. And really what it's doing is making money for CNBC. Every time that another person tunes in, they're watching, then it gives more advertisers reason to advertise with CNBC. CNBC is a news company that is owned by Comcast, which is a television and information company. And so to think that these people have, I don't want to say they have bad intentions. I mean, these people are just talking about what's going on, but they're also not thinking of that from your perspective, from your financial plan, from your investment position. They're just talking. And so what that does is, without you knowing the full context of what they're saying, and without them knowing the context of your personal situation, because they're not giving advice, or they're not giving specific advice, let me say it that way, it causes the hysteria, it causes the fear, the panic. And the more that fear and panic festers, the deeper and stronger it gets. And so I'm going to come back to these stats that Charlie put together based on this market's in turmoil. But first, I want to just kind of talk a little bit about what's going on right now. We've got tariffs. We've got here in the United States, a lot of deportation. So we've got a lot of political angst going between, the two political parties. We've got a big kind of cultural divide that is causing frustration for people. We have inflation numbers just came out and they ticked up. So now we've got a sign that maybe inflation is rising again, and that maybe we're not going to have Federal Reserve rate cuts this year, or maybe not as many as expected. And so we still have global conflicts going on. So we're still seeing just a lot of volatility as the new administration comes in and starts to put in their policy, and still kind of dealing with some of the things from the prior administration. So there's a lot going on, and we're not sure what's going to happen. We had a great market return in 2023, a great market return in 2024. People have gotten used to the market just going up. And so it becomes not addicting, but euphoric when you see every time you log into your account, or every time you get a new statement, that the market's a little bit higher and your investments are going up, and it feels good. It's like a warm hug from your investment portfolio. But what's key and what's important to understand is these markets do not go straight up like the space shuttle. It is normal for these markets to fluctuate up and down. And, sometimes we see significant drawdowns like we saw in 2022 or 2020, even back to 2008, the great financial crisis, or the dot-com bubble burst in the early 2000s. I mean, we've had a lot go on the past 24 years, and there's going to be future things that happen too that we don't know what is. We just can't plan for them. So it's important to realize that, the market doesn't go straight up, that these market swings are natural. So what drives earnings, or what drives share price for companies? At a basic level, it's earnings. The more people buy from companies and their goods and services, the more that those companies make, and the more they make, the higher their share price goes. Now, I'm oversimplifying this, but earnings drive share price. What drives the market? Well, some of that, but also I think it's a lot more to do with fear and greed. If we see a panic sell, going back a couple weeks ago when DeepSeek was announced, it sent panic into the likes of the AI companies here and the market, and would cause a pretty hard sell-off, really significant in some individual stocks, and then, pretty steep also in the indexes. And so it is, it's normal to see these fluctuations, but fear and greed can kind of drive some of this. And the other is just short-term thinking, getting back to away from your long-term investment policy, getting away from your long-term strategy and focusing on what might happen next week or next year or next month. And some of that short-term thinking can derail your long-term objectives if you're not taking those with a grain of salt. So I want to kind of dive in back on this markets in turmoil thing and just kind of share every time that the S&P 500, every time that CNBC has done one of these markets in turmoil specials, again, they're usually some significant event, some major sell-off in the market or some geopolitical action, something triggered these markets in turmoil. Going back to 2010, looks like May 6th of 2010 was the first one. There's been over 100 times over the last, since 2010, that CNBC ran this special after hours for this markets in turmoil. What I find incredibly interesting is every time, with 100% accuracy to this date. Now, I don't know what happens from here, but to this date, the 1-year return of the market, meaning the S&P 500 index, which you can't directly invest into. There are other, alternatives, ways to do that. But when I'm talking about the market, I'm talking about the S&P 500 index. The index is up every single time that, the 1-year period, like what happened 1 week or 1 month or 3 months from that special, I don't know. And I don't care. What I'm trying to say is when you think longer term and you stick with your investment policy, the market works. And that's what we see here. Every time they run this hysteria, they try to generate, and again, they're just generating income and advertising dollars for themselves and getting watchers on their show. And people are making catastrophic decisions based off of what these people say. And they panic and sell and they feel safe in cash. And the best thing you can do is take a deep breath and turn the news off and do something else. But it's wild that 100% of the time you see 1 year from the date of that being aired, the market is positive, and it's positive by an average of 40%. So 1 year later, the market is positive and it's 40% higher than the time they did that markets in turmoil. I think this is fascinating when you think about how people make decisions about their investment portfolios and letting a little bit of information from the news, from their neighbor, from their uncle, someone influence their decisions and it be catastrophic for their portfolio. And if you just ignore the news, ignore what Uncle Bobby said, if you ignore the hot tip from your neighbor or the fear mongering from your neighbor, it works out in the long run. Just wild, to kind of think of that stat. What should you do? Don't panic sell. The worst days in the market are often followed by the best. So if you cash out on one of these ugly days where the market's down 3, 4, 5%, usually we see the market rebound one of the next couple of days. So if it's down 5% one and up 4% the next, you just lost 9%. You went down the 5, you captured that 5, and then the market went up 4. So instead of being down net 1, you're down 9. And people don't understand that. They just go back to, we had a client call this past week. Take me all to cash, 100%. $1.5 million portfolio, all to cash, paid long-term and short-term capital gains for a non-qualified account, just fearful. And they've had fantastic 2023 and 2024 years. So the notion that you just make these random decisions without any thought of thinking that we're going to continue to consume and import and export and these markets are going to continue to grow. The problem with this panic selling is you lock in the loss, you miss out what happens the next day. It's because, again, usually the best days are followed by some of the worst days. You miss the recovery. The second thing is time in the market's very, very difficult. Missing the 10 best days in the market can dramatically cut your long-term returns. And, timing this market gets very, very, very difficult. I would argue it's almost impossible because not only do you have to be right once, when you get out, but you got to be right when you get back in. And I would also argue even more, you don't have to be right twice. You have to be right repeatedly. If you're going to continue to do that, you have to be right multiple times. So don't try to time the market. Don't ignore your plan. Don't listen to markets in turmoil. What should you do? Stick to your strategy. If you have a diversified portfolio, it's designed to withstand these market swings. A lot of our clients have what we call the war chest or the bond buffer. It is a portion of your account that is designed to provide income if you're taking income without having to sell equities. It is a buoy to help kind of eliminate some of the market downturn. It won't eliminate all of it. The markets fluctuate, but we've got what we call this war chest that usually has got 5 years worth of fixed income set aside to kind of weather these storms. And I think that gives a lot of people confidence. So stick to your strategy. We have constructed it on purpose, specifically for your future, but also for what happens, next week that we can't prepare. If you're young and you're still investing, keep investing. Use these downturns to buy in. If things get haywire and the market's selling off dramatically, these are great entry points because people are just throwing the baby out with the bathwater. They are just purging everything. This is a great time to pick up things cheap that people are going to regret selling, a week later. And then, finally look for opportunities. If you see something that, just seems really, really wild, thinking back to 2022, these Mag 7 names got obliterated, absolutely obliterated. And they're all up multiple X's since that, 2022 low. I mean, some of these are up 4, 5, 6, 7 times what they were in 2022. So again, if someone's gonna, just throw everything out, and if you can, look for these opportunities and you've got a place to just dabble in and pick up a position, don't be afraid to do that. In closing, these market turmoils are not new. It's part of the game. You should stay the course and focus on these long-term goals. I hope that you found this piece really insightful for the markets and turmoil piece. I'll share this on our YouTube page so you have that, and just be aware so that, as you read it, just look at it with an open mind. Just think about, how you take in these news and how you would normally react. And then think about, the actual data behind this and say, just be honest with yourself, truthful. How would I react? Am I the one that's, looks to buy the opportunities and keep investing and hold steadfast to my plan? And this reassures that I'm doing the right thing? Or am I panic selling and throwing the baby out with the bathwater? And then this markets and turmoils piece kind of gives me the data to say, okay, maybe I am getting sucked into the hysteria and the panic, and I should go back and look at the data to say, usually this market returns. In fact, again, to this date, it's been 100%. So I just think it's really insightful to think of, when you can actually look at hard data versus someone, just saying to do XYZ things. So with that said, I hope this has been helpful. I'll share this piece on the YouTube page. Be confident in your retirement. If you haven't already subscribed to the podcast, please do so. It really helps us. If you're looking for a second opinion or want help, or even if you have a question, send it to me. Send it to info@paradigmwp.com. I'd love to have a conversation. I'd love to answer your questions. Have a wonderful day.